Good afternoon, everyone. It's great to be here. Staking, by definition, is based on decentralization, as you all know. So consolidation, M&A activity is not necessarily the most intuitive, but I'm sure many of you have seen announcements on staking acquisitions over the last few months. So it's actually become a very relevant topic. I'm going to give you a quick overview of the deal activity in staking, why companies acquire staking providers, and what we can expect over the next few years in terms of M&A activity. Very quick background for those of you who don't know Areta. We are a crypto-native investment banking firm supporting teams, including staking providers, on mergers and acquisitions, capital markets transactions, and also serve as delegates in a lot of on-chain ecosystems and participate in governance. Founded in 2022, completed over 50 transactions since then, and team is mostly spread across Europe, the Middle East, and Asia. So let's take a quick look at crypto M&A activity in general, as pretty much everything in crypto M&A activity goes in cycles. In the previous bull market, 2021, we've seen a lot of transactions across the space, high deal volumes. Then in 2022, 2023 bear market, there's still been some transactions, but M&A activity is a lot more driven by distressed, acqui-hire type of deals. So the overall volume's going down. Now, in the last year, there has been a pretty significant uptick with Q4 24 seeing almost 60 M&A transactions in one quarter, a lot larger M&A deals, actually $3 billion transactions over the last half a year. So what's interesting about this is that it also involves some non-crypto companies, pretty much for the first times. We're seeing here the Robinhood, Stripe, NinjaTrader deals, so also crypto companies acquiring non-crypto fintech companies. And it's also a signal of a more maturing industry as a whole. Now, staking has actually historically been one of the most acquisitive categories. I think the first staking M&A deal dates back to 2018. I'll walk you through some of the transactions on the next slide. But what we can see here that staking as well as mining actually accounts for a pretty fair share of overall crypto mergers and acquisitions. And what's very interesting about this is that unlike in exchanges or Bitcoin mining, for example, the acquirers are not only companies from the same vertical, but in crypto staking, we see M&A deals involving acquirers from different types of categories. So actually pretty equally split across categories such as financial services, staking service providers, analytics, also some protocols and restaking more recently, and obviously exchanges. And there's a couple others like custodians, miners that are looking to diversify. So the fact that there are such strong synergies between a lot of business models with staking basically drives some of this M&A activity that we've been seeing. So here's a very short overview of some of the recent and some of the first M&A deals in staking. So I think the first wave, 2021, and this is a non-exhaustive list, so I think Mirko back then sold his validator to Stake Capital in 2018, which was probably the first M&A deal. But the first wave was really driven by staking companies, exchanges acquiring staking providers and basically bringing the service in-house. Then in early 24, we saw a first wave of liquid staking, restaking M&A deals. And actually over the last 10 months or so, there have been a lot of deals from a variety of acquirers. As I mentioned, from someone like Galaxy, financial services crypto company, to Alchemy, Nansen from the data analytics side, ETF issuers, Sol Strategies, basically MicroStrategy for Solana. So really a diverse set of acquirers across the entire space. Now, what's been driving this activity, besides the pretty significant synergies on the revenue and cost side that I mentioned, Staking overall is obviously a growing market. The number and sort of market cap of stakeable asset has grown significantly over the years. And obviously, participants want to have exposure to this industry and offer those services to clients. It's also, by definition, a highly fragmented market. We have over 400 staking providers according to staking rewards, 70% of which have under 100 million in assets under delegation, and it's becoming increasingly competitive and more difficult for them to get into delegator sets. So we probably see a lot more M&A also on the smaller end and long tail of the industry. And there are obviously also a bunch of regulatory institutional tailwinds where basically staking will be allowed for ETFs, and therefore ETF issuers will also look to bring this service in-house. Now, the big question is always valuation. How do you value a staking provider? And in M&A, typically you would look at revenue multiples, EBITDA or profit multiples, private precedent transactions, as well as public comparables, so listed companies. Now, in staking, there are not really any publicly listed staking companies just yet, so it's more difficult to benchmark against those. Private transactions are mostly not publicly announced in terms of valuation and underlying revenues, so it's kind of difficult to basically benchmark based on public information. What oftentimes happens is that valuation is derived by triangulating between a set of public comparables. So in this case, mining companies somewhat have similar characteristics, so potential acquirer might look at the valuation of those. Crypto trading platforms, exchanges, those are some of the very few listed crypto companies and are obviously relevant comparables. TradFi asset managers, I think it's very interesting. Obviously, the assets under management, assets under delegations, similarities. And then some might argue that data center, real estate investment trusts, for example, can be also relevant comparables, more so if there is a physical data center component attached. But overall, these are just few factors and comparables that drive valuation. Obviously comes down a lot to the quality of the company, the size, the networks, client diversification, and so forth. I think we're running out of time, so just a very high-level outlook on what we can expect going forward in terms of M&A activity. I think, one, there will be more horizontal M&A, so really consolidation within the staking service provider category where larger companies acquire smaller validators. Secondly, I think we will see a lot more vertical M&A across the value chain where adjacent business models, exchanges, custodians, ETF issuers will look to acquire staking providers to internalize the service. And then lastly, I think as new categories, liquid staking, restaking mature, we're also going to see more activity on this front in terms of M&A. Yeah, thanks a lot for listening in.